There is a lot of zoomed in emotion happening right now in the crypto space, and that's all good. We're going to talk to it. We're going to speak to it, but I think a lot of people are falling into this trap of just short-term volatility. On red days, they get very, very bearish, but then all of a sudden on a nice green day, even if it's just nothing crazy, they're getting so bullish. It's just an incredible short-term emotional roller coaster that I think is such a dangerous game to play. If you're out there, if that kind of feels like you, I'm here to tell you it's normal, because everybody has an emotional side, and it's normal to zoom in on the charts and just wait on the short term. Let's go, what's going on? But snap out of it. It's what I want to say. I want to just say, zoom out. It is great to anticipate a potential bear market. I do every day. But it's also okay to zoom out on the macro charts and try and have a full picture of the story. Hit the subscribe and like on the way in. I want to show a couple clips, and we're going to really dive into some data. If you want to hit the timestamps, if this ends up being a little bit longer video, please feel free to do so. I just think this is a very important macro video that I want to do. I want to put out there for everybody. Let's do it. I want to start with this quick clip. Check it out.
This thing's going hundreds of thousands of dollars per coin, Charles. I mean, the U.S. government is in so much debt. The way I think about Bitcoin's price equals technology plus fiat liquidity. So it's going to go up because it's innovative tech and it's better money. But what really shoots it up at a neck-breaking pace is when our government is tens of trillions of dollars in debt and has to roll that debt over. So they got a lot of money to print, and financial assets are going to soar. And Bitcoin goes up the most because it's the hardest to make more of.
I know already, probably a minute into this video, people are commenting about the tariffs. I'm going to talk about the tariffs in this video. People are probably commenting, Trump killed the bull run again. We were about to get a reversal. Trump has announced 25% tariffs on all cars not made in the U.S. This happened today. This just happened, like not long ago, hours ago. I know. We're going to talk about it. I just know there's people already commenting that while you're watching the video, if even they are watching the video. Now, I think even more importantly, I want to show this clip, and then we're really going to get into the bulk of things and talk about where we are in this cycle, and we're even going to look at short term. But this is Mike Alford over here. He did an interview on Scott Melker, Wolf of Wall Street's channel. Check it out.
I think you might have seen too that NYDIG just bought Crusoe Energies, Bitcoin mining. I think NYDIG is scooping up mining assets
He's talking about what's going on in the crypto industry, what's going on in the space.
Very quietly, and he'll probably try to do an IPO next year. So we're not going to see a top in crypto when this type of activity is going on. Like the kid analyst staring at the charts, again, with no business experience, never built a business, never sat on a board, never done an M&A transaction. Like they're calling for the top, and in the meantime, like serious operators are out like starting a huge M&A process right now. So I think the top has been pushed out into 2026. And it's even possible that I'm wrong about that, and it's like early 2027.
I really enjoy seeing Mike and his sentiment, industry veteran Jack and his sentiment. I enjoy not being at least the only bull here, because sometimes I kind of feel like I am. But it's not only that they're just like kind of macro bulls, whatever, Bitcoin to the moon. There's actual good reasons for what they are saying. And so you can even dissect a headline like this, Trump announcing 25% tariffs. There is so many people that are, and I see it in the comments already today, man, Trump just ruined the bull market again. Please stop with the tariff news. But tariffs are one piece of the bullish catalyst that will drive the cycle. Before we get into the charts, I want to give you a reminder of something. I posted this earlier. This is just a brief list. That's what's going on right now. GameStop deploying billions as of today into Bitcoin. You saw that the news from today. The US dollar is falling. We've been tracking that chart. Trump reveals US altcoin stockpile. That is still something. I know the headline has faded. I know the whole pump that happened is just all the gains are gone and we're back down, but it is still a thing. And it is still a fundamental macro thing. Tariff, I had to edit this post and add the tariff as bullish because there's just too many negative comments about the tariff news. The tariff economic boom is not priced in. What the tariffs are doing for America, bolstering and strengthening America and the economy, that is a very real thing. It's interesting to see. There's two ways to look at it. People are just like, oh, it's a bear market. Oh, tariffs are going to ruin the world and ruin everything. And then you have, I saw this post by Nick over here. Good. And I agree. This will hugely support American manufacturing jobs. An economic boom coming to America in the next 1 to 2 years will be nothing but phenomenal for crypto. Now, again, I'm saying this, and people are only looking at literally this one red candle, a daily red candle. And you know what? Maybe we open red tomorrow and we actually capitulate to 1700 on Ethereum's chart. I'm using Ethereum as just a good example of altcoins. It's all they'll be looking at. They're not zoomed out. They're not looking at what is happening right now. I'm going to look at it on the S&P 500 chart as it applies to crypto. It's such a good roadmap, I think. At least it's a good way for me to visualize and describe to you where I think we are. And I could be wrong. ADA, an altcoin ETF momentum. America building strong, a strategic Bitcoin reserve. BlackRock's Bitcoin ETF hits 50 billion. Strategy, Sailor's strategy keeps stacking Bitcoin. SEC rules the mining rewards are not securities. Fed rate cuts on deck. They're coming up. Pro crypto SEC now, everybody. I keep saying it, but do you realize? SEC dropping case after case. Quantitative tightening slowing down is going to begin in April. We are days away from April right now. Corporates are buying Bitcoin like never before. Nation-state Bitcoin race heating up. Countries are racing to buy Bitcoin. Made in America coins are ready. Made in America coins are ready. The blue chips like Cardano and others, it's such a nice story that is getting pieced together right now. And so again, I go to the Ethereum chart. Why be so zoomed in? I get it. And I'm saying this because I often say I'm just a macro value investor. And the reason I'm a macro value investor is because I know myself. I know if I'm a trader, if I'm a short-term person just trying to track the next exact move for crypto, I will go crazy. I will be one of those emotion people sees a red candle. I'm like, come on, what's going on? Are we entering a bear market? And then when you zoom out on a chart, you get a very clear indication. Oh, you know what? We're in a move, a regular move, a move that happens all of the time. Whether a move that happens right before the next bull market high or a move that happens at the bottom of a bear market, we're just in a move. We're in a move like that. We could go lower. We could go higher, but we're just in a move. And it's just zoom out on the chaos that's going on within the move and understand the move could get more volatile. It could get more choppy. We even looked at the bottoming out formation of Ethereum back here, right? We hit that swing low. We're pumping out of it. Oh, bull market's coming. We're going to go to all-time highs, and then boom, right? It's like we're retesting that same area. Bear market, no. And then it's like bull market, bear market, bull market, bear market, bull market, bear market. That's how the zoomed in person literally feels because that's emotion. And I'm just saying, for me, I need to zoom out on that. I can't be playing that game. And so that's why the content that I do is macro-minded, even though I do short-term charts because I'm always just trying to anticipate and be ready, right? I want to be ready for another swing low in markets. Ethereum, if it falls, goes into a swing low. I want to be ready for a move like that mentally. So I'm not going crazy. But what's the oscillator doing? Are we putting in bullish momentum, higher low, right? Some bullish divergence, maybe. That's what I want to be prepared for. But let's dive deeper into the macro and talk about where we are in the cycle because I think a lot of people are like, are we really going to go higher? Mike Alfred over here talking about all-time highs going into 2026, maybe even 2027, an extended cycle. And that is so in play with how we're seeing things play out. And I want to use S&P 500 to kind of give an idea here. Look at this. We have just this kind of, I think, a foundation to building this chart out, at least the story of markets right now. Quantitative tightening slowing down in April. And what I really want to point out to you on this S&P 500 chart is this, because this is what's happening from a technical perspective. We fell below the 20-week. We fell below the 50-week, right? The move is starting to look toppy, like bull market high toppy. And actually, if I go and change this to a daily chart, you even see it, you get a little bit of a different illustration of that because you see this 20-day just crashing through the 50, that blue line, and then the green line, the 20-day crashing below the 200-day, the red line. If you go back, right, and we go all the way back here, to last really bull market high in 2021, look what was happening. Similar move. 20-day crashing below the blue, crashing below the red. And what was this? This was the beginning of a bear cycle. But just like any other time in analysis, you can't take one simple indicator and say, boom, that's it. That's the bearish indicator. You can, and I think people probably are. They're like, man, we're getting this move. It's bear market now, right? It's game over. But what if you sprinkle in actual other data, like quantitative tightening is going to be slowing down? Because back here, as we entered that bear market, quantitative tightening was beginning. And that's data. That's not an opinion. So now we're like, okay, so then what does this move mean then if quantitative tightening is about to slow? Interest rates are about to kind of continue to come down. Maybe the tariff pain just is forgotten about. What happens here? Well, let's zoom out and try and get more context to the story. And so I wanted to go back, and I wanted to go back here. And this could give us a nice little kind of sample of what to anticipate. If you look back here, 2019 quantitative tightening ending back here. And I'm using this area because we're in a similar environment as far as quantitative tightening coming to an end, right? So a very similar environment in terms of quantitative tightening, at least just that one piece of data. But then I went back further and I said, okay, around that time, what was going on with the charts, what was happening, and check it out. You remember the 2018 bear market low for crypto. This is what it looks like on the S&P 500. Look at the 20-day crashing below the 50, crashing below the 200. But check this out. Was this a multi-month extended bear market? It wasn't. This was, from when the 20 crossed below the 200, we're looking at around a month and a half of kind of pain. That is what was right there. A month and a half of pain, and then it was boom, exiting that pain for years to come before the next swing high, which was COVID. So if we go back and we look at the chart, now we have two similar technical moves, namely that 20 crossing below the 200 and the 50, the 20 crossing below the 200 and the 50, and here we are, the 20 crossing below the 250 in this manner. It's kind of like, well, what macroeconomic or even monetary cycle area are we more in? And I would argue we're more in this one, right, than this one. Because the headlines aren't quantitative tightening is about to begin. The headlines are quantitative tightening is about to slow down. And I'm not saying it's coming to an end, but I'm just saying it's going to slow down. And so when we take something even like the Fed net liquidity indicator and we plot it on the chart, what is more likely to happen if we're even just getting, I'm not saying we're getting, quantitative easing, right? But what's more likely to happen when quantitative tightening at least slows down? And the answer to that is a bottoming out here of the Fed net liquidity, right? And then ultimately, eventually, a trending up of the Fed net liquidity. As opposed to when quantitative tightening is beginning, this Fed net liquidity is going to start falling. And that's what will cause price to fall. I think we're in a different environment that you can't just point back to this move and say, oh, it's so similar to 2022, we're just going to fall for months. So with that being said, and then we sprinkle in all the data that we have here in terms of what's going on fundamentally for crypto. And then we just sprinkle in the fundamentals for Bitcoin technical analysis. And we say, you know what? If we put aside monetary cycles and the Fed talk, and we put aside tariff headlines, everything, good or bad headlines, and we just look at a chart, we have Bitcoin in this inverse head and shoulders breakout, a throwback to the neckline, which we anticipated from back here when we were at swing high. If you remember, I was talking about the throwback to the neckline. We were anticipating it. It happened. It's a normal technical analysis move. And we just have to allow Bitcoin to continue to consolidate. And even ending out March, going into April, maybe there's more volatility and we're back into the 70s, testing lower 70s, testing a lower low from this previous swing low, right? So like Bitcoin's falling into the lower 70s, we have a lower low. People are really getting anxious in these markets. And we're actually still putting in some type of bottoming out formation. As Mike said, we're going into kind of a potential 2026, 2027 bull market high. that could be because we have these extended consolidation phases for Bitcoin. What happened here with this 8-month consolidation was the first hint that things are definitely different this cycle. And so because of that, we need to just anticipate lengthening consolidations, lengthening volatility, and just that emotional roller coaster, if you're too zoomed in, can become very dangerous. This is why I'm just saying zoom out on the bigger picture. And that's kind of what I'm doing. And I think when we have people like Mike or Jack that are just ultra bullish, and there's many others in the space that are very bullish, I think it's very simply because they're zoomed out on things. It's not so much, man, Bitcoin's about to maybe fall $10,000. That's the short-term trap that I think a lot of people fall into. So these are my thoughts. There's so much more to say, so much more to talk about. I should just do a long video and just talk. I try and keep the video shorter, but these are my thoughts today. Let me know your thoughts in the comments. I hope you're hanging in there. Hit the subscribe, hit the like if you enjoyed the video. I'll see you in the next video. God bless.